folks, I'm L.A. Little, and this is your weekly TA wrap. But we take a look at these markets from a neoclassical perspective and ask ourselves what happened last week and what does it tell us about the coming one. I do this show once a week, every Sunday night live at 9 o'clock Eastern Time here on the base of the beautiful Rocky Mountains. Folks, talk about what happened and what's going to happen. I think the best thing that can be said about last week is that it was a bit chaotic, and it probably leaves more questions than it does answers. Let's quickly just look at the closing quotes. If you remember on not on Sunday, but on what was it, Thursday of last week, we finally got the break, the push down. We've been looking for that for some time. That push, however, didn't go very far. It actually went decent direction, a decent amount in the direction of down, but about halfway where I thought it might go. We talked about it Thursday night, said that it looked as if we were finally going to get the correction, and then Friday we got takeaway bars on almost everything. Well, not everything, but a lot. And that to me usually is indicative of some sort of a sign that what has been in place really isn't going to be in place all that much longer. That doesn't mean that it has to, break right away, but it's usually indicative of a change coming. And if we're going to change what's been happening, what we're going to change is we're going to change the infinite up. The Dow Jones was up 167, almost 168 points on Friday. The S&P's gained back 23.5. You can scan the numbers here, but most of what was lost on Thursday was gained back on Friday, if not more in some cases. If we go and look at the actual charts, we're going to see in that situation, we're going to see, if I can get the right charts up, hang on just a second. We're going to see a situation here where the, my mind's not working. It's been a long day and night. I've been working pretty early today until late. So bear with me here. General markets. Okay, here we go. So what we're gonna see here is we're gonna see a situation where on the S&Ps, the listed issues, the ones that have been the strongest lately, they pretty much were takeaway bars. We came all the way back up to the point. When we were down here Friday, we were thinking that there was the potential that we could come back into the swing point high, right? Make a move farther down, come back into that swing point high. That's not what happened. We didn't get back to the swing point high. What we got back to was halfway back, and that was it. And then from then on, it was straight back the other way, and you can see it's pretty much a takeaway bar. Friday's bar pretty much took away everything that Thursday's bar had done, right? So you come down, right, all the way down, and then you go straight back up, right back up here to highs, looking at trying to break this swing point high again. That looks pretty much the same on the S&Ps, and I'm going to pull this over on the S&Ps. From a weekly point of view too, you actually had a volume increase. You went under, back over, you're still up there, so there's nothing here to tell you that this thing's going to come back. On the daily, you got a takeaway bar after a break of a ledge, so to speak, and volume wasn't quite as heavy, but you're right back at the highs. The Dow Jones did essentially the same thing. It looks almost identical. On the Dow Jones, you have takeaway bar, the same sort of thing here. It just took away what was done the prior day. The swing point high, it's right back up there over it again, right? So you're back at the highs. On the weekly, you can see the weekly actually has a change in trend. right? So we get a transition over those highs. So this high was taken out. So in the case of the Dow, it's actually quite bullish in that it not only have you broken here on a daily time frame, now you've broken here on the weekly time frame. And that's a break on multiple time frames. That's pretty bullish. You know, that's usually what you're looking for. Now, where it gets chaotic is if you walk over to the NDX and the composite itself, you're going to see something that looks very different, right? So I'm over here, I'm on the NDX. Remember the ledge that we were talking about? The ledge was here. We broke under that ledge, right? That led to the fast move down here that brought us right to this, you know, support zone, which was gap support, right? You had a gap support here. So you come into the gap support, you flip around, volume is pretty decent coming back. You flip around, you come back up, and you get stuck. You get stuck right there, right at the ledge, right where it broke, right? That's where you're testing back up. And although we don't have, in this case, we don't actually have a swing point low that we're doing a retest regen on. It doesn't exist, right? Because we never set one up here. What we do have, though, is we do have volume expanding. You can see it over here on the, you can see a little bit of volume expansion here as the price came back. But on this chart, there's nothing major that's happened. What you do have is you have this case now where if it can get over this, back up over this little area here, right, then you're going to go back and try to test the highs and break higher. The fact that some of the indexes are showing the strength, breaking out, Dow Jones breaking out, takeaway bars on the other two, but here it's not a takeaway bar. It doesn't take away everything. It takes away part. The IXIC, the NASDAQ composite, the broad composite looks exactly the same. You come back up, you're right back to the ledge. It's the exact same sort of scenario that we just looked at. Right, you're right back here at that ledge. This is that breakdown area right in here. It's right back up there. It came into the gap support, same thing, held. Volume expands here. Everything looks pretty much the same. If you look at the weekly over here, volume expansion, right, as you're going. There's some expansion of volume as you're coming back, but still can't hardly do anything with it. The difference really is unable to get back and reclaim the full breakdown. Now, look at this chart and then go back and look at the S&P chart. The bar at the top here is essentially the same bar here. Those tops are almost the same. In other words, what I'm trying to show you is that there was weakness already. If we look at the S&P, there was weakness already. These were almost the same. If we go back and we look at the IXIC, it's a different picture, right? You don't have the same situation where here that trade off the top, right? It's a lower one. It looks different, right? This one's weaker, that's why. So what you want to see, if you want to be bullish, you want to see it close back over this area. It's got to get back over here. If it gets back over it, you're going to see the S&Ps and the Dows breaking higher. But right now you have divergence. You have divergence between the two indexes, or actually the two areas of the market, the listed issues versus the over-the-counter NASDAQ, and the Russell. The Russell looks the same as the NASDAQ. It's been weaker. Matter of fact, it's been even weaker than we just saw with respect to this high, right? Look how much lower this high was. So the Russell, the NASDAQ, the NDX, will they get pulled higher? That's really the question here. Will they get pulled higher, and will they go shooting back up to the top, right? Or will, in fact, they dig deeper down, right, and pull the SPX Dow Jones down? That's the questions. That's what divergence is all about, right? When you've got a divergence case, you know, I can't draw a D, can I? Huh? I need I need a free draw tool. I don't see that I have one. Well, we'll leave it at that anyway. But the question is what do you do with divergence, right? It's change. One side's going to win, one side's going to lose. You don't have, looking at the indexes, you don't have a clear indication of what that is. So what do? You have to go look elsewhere. You have to go look at some of the sectors and see if some of the sectors are going to give you some sort of a clue as we go forward. So let's pop into the sectors and let's actually look through each of these together. So the sectors have been very strong. They got some weakness last week, right on Thursday, and we're just going to walk through them. You're not going to see much difference over here on the weeklies, but on the dailies we can see what kind of power we had up and didn't have. So the IYT wanted it to come back into a retest region, didn't do it. A little bump back up, didn't do a takeaway bar. That one's still showing some weakness. So volume expansion, just like here on the SMH. This is a hammer reversal. Doesn't have any volume though. And it's just consolidation over here, so nothing worrisome on the weekly yet. But the IYT, the SMH in particular, don't look that particularly good. Now here you have a very different situation, the XLB, which is very interesting because when we go and look at the auxiliary markets, we're going to see the precious metals breaking down, whereas this is interesting because this is going back to the highs, right? Look at the volume expansion, not the volume expansion, the wide price bar. It's an engulfing, bullish engulfing. That looks to go test the highs again. And the other interesting part about it, if we look at the weekly, is your volume here compared to your volume there, right? That was what it's testing into the last 3 weeks. All 3 weeks it can't move down. It's testing into that big bar and it's holding. The big bar, if you look at it on the dailies over here, you test into it, you can't break it down, you don't have the volume comparatively, right? That's the difference. This thing's going to try to go higher. XLE. So we've got two somewhat wanting to go lower. XLB wants to go higher. Here's the energy. Okay, now the energy is interesting because on this case, what we have on here is you didn't quite get a takeaway bar and the volume discrepancy is huge. So I suspect what you're going to see here is this one's going to fail trying to get back up to the highs. Now financials, finally, the financials have been the dogs for a long time. But on the financials, it wasn't just a takeaway bar, right? This was a full-fledged press back to the upside. Now, on the financials, it was a full retest regen back in. You know, if I take the top, it had been doing the retest all along, right? So it did a full retest down to this area, right? Full retest, regenerates higher, and comes flying back up with volume. Let me see what the low was, because I don't think it actually hit a new low. Oh, it was the same one, 2039. So that's actually bullish, and I suspect this thing, now that it's got its head of steam, this thing's going to go back and test the highs. It's the largest sector in the S&P 500. So that, when we ask that question about can the S&P pull the other indexes higher, XLF is saying, yeah, I can. We'll see if it continues on and see if the volume continues on in it. Okay, XLI has been one of the strongest ones. This did a takeaway, didn't have the volume. This one's going to try to push up and test the high again. Excuse me, that's XLI, not XLK. XLK, okay, this one's not nearly as strong. And that, 33.92, that's actually a failure on the prior bar over here on the weekly. So on the weekly, there's a failure on the prior bar. and you see it here with the volume difference, right? On the daily, it didn't quite do a takeaway. There's quite a bit of room still up there, so that one doesn't look as good. So IYT, semiconductors, technology, they're going to try to trade lower. Industrial is going to try to test the tops. XLF showing power. XLE looks to me like it's going to go higher but fell, and XLB wants to go higher. Let's look at the XLP. Now this is the safety sector. There's a lot of money rotating to it over the last 2 weeks on the breakout here. Okay, now did it retest regen? The high was 42.20, and it did. Volumes 45.6 into 66 into the breakout. This is going to flip around and go higher. This is going to come back and test the highs. XLU, this one was getting killed, and then they came in and bought it at the end of the day. So this was a continuation retest regen into this bar. So you can see the retest area, retest regen area was here, and it tested it twice now. It tested it here and tested it again there on the bottom, the full bottom, and the volume's still not there. That volume on this September 19th bar, you got 20, and you came into it 19, came into it with 16. So that looks to hold and try to work higher. XL, that was the XLU. Let's look at the XLV. Okay, so this is healthcare. Healthcare was showing some pretty good strength. I believe it did a takeaway, and it did. Volume expanding. That one looks to go to the highs. XLY. And not as good. So the thing that I see here, the one thing that really stands out is XLF. That's going to be one to watch. The other piece of this is that the two technology related ones, which are the NDX pieces, the semiconductors, XLK, they also mirror what we're seeing over in the NDX and NASDAQ, and that is that they don't have the strength trying to come back up. Let's go to the ox markets. I want to look at gold and silver. Gold broke down last week on Friday, and gold has a habit of breaking down on Friday. I'm going to go to the currencies first. FXE. FXE comes into this big bar right after a huge sell-off off two ideas actually. One, that the euro was going to weaken as a result of central bank intervention, which happened on Thursday. Not so much intervention, but lowering of rates. They lowered it to 25 basis point in the ECB. That continued to put pressure on this. And then you also had the flip side where GDP was stronger. The employment numbers, I don't know that they were stronger. They were okay. A little bit stronger. Actually, they were stronger. They were like 220, I think, versus what was expected. The pressure that was put on this, though, as it comes into this big bar on the 18th, it fails. Right? There's a clean failure here in terms of the price volume. Right? So if I look at the volume on this case here, and I look at the volume coming back into it, it had higher volume here, which said it was going to try to break it, and then when it tries to break it, volume tails off. It does a little hammer, right? Closes back into the bar. 132 is the low, closes 132.13. That's a test to break to the downside after a fast move on breaks. Remember, this was a break of multiple swing points here, right? As this thing broke. And so if I put the line across there right here, right, that's 1, 2, 3 bars. Those 3 bars, that's about as fast as you can expect. You're going to get some sort of retrace, right, to do a retest regen on those bars, probably now back up into this area and retest. So back up into here is where you got to expect it to try to come back to. Looking over here on the weekly, it's doing a retest of this high. So the retest regen on the weekly, yeah, the retest regen on the weekly can take it all the way back down to here. The way this hit it over here makes me think that after it comes back up, we're going to see it flip around, come back down, and actually break this, come down to a full retest down into this area. But that's after a bounce. And if I look at the dollar, I think the dollar did exactly the opposite, which is what you would expect, right? You would expect it to fall at the top, and that's exactly what it did, right? You got exactly the opposite situation here, where you come back into the top of this bar, right? It has this volume on it. You don't have the volume. You fell, right? You're gonna get a retrace back in the same sort of situation. You're gonna retrace back. You're gonna do a retest regen. Now on this region, right? This is your high. It can test as low as that. I expect it's going to come back in and test the bottom of this area here, which would mirror what's happening in the FXE. Now, when that happens, that's going to put some juice back into the gold. Now, what the gold did is, remember, the gold was using this bar, right? This bar has been capturing almost all the activity now for the last 2.5 months. You had one little, spurt below it, and now you got another one. I expect you're going to see it pop right back in here, get back inside this. Now, what will probably happen though is it's going to fail once the euro starts to turn. Excuse me. So what I would expect, or what I would be looking for, if I'm looking for places to short it, for example, I would be looking for areas where it's going to have difficulty. So this area right in here looks difficult. Yeah, it can probably get back up into that area. What is it, about 130, 128.5 on the GLD. Yeah. So I would expect, the first thing we'll do is come back in and test this. If it can get over it, it can get back to there. But it certainly is going to come test this again. That would certainly be the test. And then if you get over that, then you can come back up to here. I think silver probably looks the same. The other big news last week was the bond sell-off. Yeah, silver looks the same. If we look at the bonds, yeah, see, the bonds are coming right back in. Now, after a long sell-off, when you have those, right, you get the bounce, and you get some, there was money coming in here and here on this bar and in this bar. But after that, you get a retrace. You can get a retrace all the way back deep, right, all the way back to the bottom, maybe even set a new low. That's what's happening. Volume is expanding. The 2 bars it's trying to come back into are here. So this little area down here where that support zone is, that's the area it's trying to come back to. I would expect you to get in there. Volume's probably going to tail off, right? And then you'll get some sort of a bounce. What we did now, as we've done so many times, is we broke a swing point low. So a retest regen into that swing point low is what you'd be looking for. And it depends on how it hits this bottom, right? There's some decent volume down here. It's coming in with decent volume too, though. So if it gets all the way into these, especially into this one here, that's where you got to expect you see a bounce. If it does bounce, back up to do a retest regen. And bonds really, if they begin to break down, I believe they're going to be trouble for the market, for the equities. I don't know that they're going to break down yet. It looks to me like they're probably going to work sideways for longer. It's just a large range now. And in this, I don't know if this caught people by surprise or not, but that was a pretty good one. There is an ABCD structure as well. that looks to take it right down to the bottom, right down to this area. Okay, so when I look at all of those guys and I think about the divergence, you always have to back up and say, okay, what's my trend? My trend is still up, right? Sector trends, you know, all the trends, in fact, if we come back over here, pull this back over and pull up the trends, you know, all the trends are still bullish. I mean, we don't really have much in the way of bearishness. We did turn sideways in a couple, you know, 2 or 3. But for the most part, it's bullish. When you have bullish sectors and you have bullish indexes, you still have to lean to that direction if you're going to lean. Until there's proof that you shouldn't. And so far, that proof is not exactly clear, right? Because we have divergences. And so that's one thing to consider, is that you don't want to step away from being bullish because you're getting some, you know, toppy type behavior up here. You got to see it develop. And matter of fact, when you have a situation like we have now, where we've come back, right? This is a retest regen area. Even if this thing were to fall, it's probably a buy back in here because it's after 6 bars already. So even if this fails up here and comes back down again, right, it's probably a buy into this area. We'll have to see if in fact it happens, what it looks like, but that's more than likely what's going to happen. And that's going to be true not just here, right, but if you look at any of these indexes. Now the Russell's already done the retest, right? This is the weakest one right now. It's already done its retest regen. In other words, it came into the bottom of this bar, did its retest down on the bottom of the bar. You know, it was all the way down to the bottom end of it here almost, right? That's almost a full retest. So it retested here, it came back in and did almost a full retest now. If it comes down the next time, it's probably going to break it, right, and bring it back down into a deeper level. That would bring the other indexes, because if you go look at those, that would actually bring the NDX back to a retest regen area. And what is a retest regen area? It's really simply just coming back to prior highs, right, and retesting them, right? You broke over them with suspect volume. You want to come back down here and test them again. And that usually takes place. And when it takes place after 6 bars, it's usually a buy. So even if we want to be bearish, the bearishness really is just a timing thing for now, because the longer term trends, intermediate, short term, most of them all are still bullish, and the structure is in place to be bought if you get the retrace. So you don't want to get too bearish yet, but at the same time you have to realize that there does seem to be a change in the wind, and that change over some period of time here, I would think over the next month or two, and I've been saying for a while now, I expect next year is going to be a lot more difficult, the beginning of the year. That's 6-7 weeks out. Yeah, you know, 8 weeks, a couple weeks into January, you start having problems. Yeah, that would all line up with what you're seeing right here, right now. All right, that's my view, that's my thoughts. Let me see if you get any questions real quick. I don't see any, which I guess works well since we're out of time. Look for this market to chop. I don't think it's going to just, you know, fly higher. And at the same time, even if it comes back, it's probably going to get bought. So it's choppy. It's choppy now. A lot of indecision. You got a lot of people can't leave the market. We saw that last week and the week before, where they were rotating. They don't want to leave, right? They want to get out of the risky stuff, but they don't want to leave the market. And I suspect that's going to be true all the way through the end of the year. Have a great one, folks. Thanks for joining, and I'll see you next time. I'm L.A. Little. This is and was your daily, actually your weekly TA wrap. Have a great one. Good night.